Hello everyone, Dave Landry here from DaveLandry.com. This is your Daily 5. Once again, I am super excited about stocks, especially semiconductors, and I'm super excited about crypto, especially the altcoins, but Bitcoin obviously is doing pretty darn good too. So let's dive right in. So let's take a look at the TFM 10% system and the S&P 500. My thinking with this system is kind of technical analysis 101. If a market is weak, it tends to get weaker. So when a market is 10% or more away from its 50-week closing high, that's a time where you might want to think about getting out of the market. One of my clients pointed out that when it's more than 5% away and less than 10, that's a bit of a caution zone, a danger zone where you might want to think about exiting the market. I did a little testing with that. It will give you a lot more whipsaw, but it also will get you out of the market really early. Anyway, the rules for the sell side are the market must be 10% or more away from its 50-week closing high and close below the 50-week moving average. And that's it. That's the whole system as far as getting out of the way. The designer's intent, so to speak, and by the way, if you're going to trade somebody's system, make sure you know and understand the designer's intent. The intent with this system is to get you out of the way to avoid the so-called diaper change moments, and that's an Ian McAtevey term. Anyway, so you want to look to exit a market with 10% or more away from the 50-week closing high and closes below the 50-week moving average. So right here is our last sell signal, and the market did not continue to implode, obviously. And the old hedge fund adage comes to mind: he who fights and runs away lives to fight another day. Greg Morris, as I often say, says whipsaws are frustrating, bear markets are devastating. You could survive frustration. So as I've been saying, this is a whipsaw signal. The buy signals are a little bit more stringent. You need 2 bars of Landry light. That means the lows are greater than the 50-week moving average, and you have to close within 10% of the 50-week closing high. So you can see that was our last buy signal for the S&P 500, and so far, so good there. Now, I was looking at the Qs, and without doing a lot of mechanical testing, I noticed that it looks like the system tests out in the Qs, so I thought it'd be fun, and I know you want to party with me, if I bought 100 shares of the next signal, and that was our signal down here at 319.49, and I was just doing this for S&Gs. Now, just a quick little background. Years ago, I did a lot of mechanical testing, 20-something years ago, I guess, and I ended up becoming a discretionary trader from it. But I did learn a lot about trend following in the process. Now, following a mechanical system can be really tough, a lot tougher than you might think, because you look at the charts and you're thinking, oh, this is easy, buy here, sell here. But when you try to do it in real time, you find out very quickly that the map is not the territory. So this little S&G type of position turned into, knock on wood, a huge winner. So as I'm recording this, I'm up over 126 points on 100 shares. That's $12,612. That's beginning to add up. Something that was just going to be like something for fun is now becoming real money. And here's the scary part, and this is just trend following, longer term trend following at least. It's susceptible to very deep drawdowns. So if I were to stop out, I would give up 65 points. And that's going to be a little tough to stomach. So I told everyone I was going to do 100 shares and follow it mechanically to see what happens, and we'll see what happens. But it's going to be very hard for me to hold on to that. Maybe once that moving average catches up the price a little bit, it might be a little bit easier. But anyway, so that's the system there in the Qs. I'm often asked, can I use this in other markets? And I would say yes, with a big caveat. You want to make sure you adjust to the volatility of the market. 10% is a good round number for the S&P 500 and the Qs. Probably be better off using something like Landry Light pullbacks, which I'll discuss here in a minute, in other markets like crypto and the semiconductors, etc. Anyway, speaking of Landry Light pullbacks, let's talk about that in the Qs. Notice that the Qs obviously have been doing really well. We had lots and lots of Landry Light, meaning that the lows are greater than the moving average. The little indicator at the bottom, or as I like to call it, illustrator, because it doesn't indicate anything. I see a guy on YouTube, there's a lot of them, but there's one in particular. I'm getting a lot of ads for his magical little indicator, tells you when to buy and sell. Well, an indicator doesn't really indicate anything. It just illustrates what's already in the chart. Even though I love my indicators, they're really more illustrators. And you could just look at the chart and see, wow, this is in an uptrend, and that's confirmed down here by the Landry light. By the way, the Landry light does not measure magnitude. It's just a simple day count of the number of bars above the 50-week moving average. So you see right here, it's about 40 or 50 bars. The market pulls back to the moving average. That's actually a buy signal when it touches the moving average, if and only if it begins to resume its uptrend. So the buy would have been around here, and then so far so good on that. The next buy was right here. As you can see, the Landry light went from a count of 30-something down to 0 because the count resets when it crosses or touches, I should say, the moving average. In this case, I'm using the 30 EMA. I'm amazed at how the 30 EMA can keep you out of a lot of trouble. So I would urge you to go out and look at a lot of markets, especially crypto right now. And I'll get to that in just one second. But crypto, the 30 EMA is your best friend there, at least for now. You want to avoid any pairs that are trading below the 30 EMA and focus on those that are trading above. And you're going to be amazed at how much trouble that'll keep you out of. Now, I'm a huge fan of the semis confirming what's happening in the overall market. I haven't done any mechanical testing here, but through empirical research over the last several decades, I've noticed that the market tends to do a lot better when the semiconductors are also doing better. And one argument you can make is, well, the Dow theory is the transports support the market because they're transporting goods, and the semiconductors are more like the information superhighway. However you want to wrap your head around it, as a general statement, it's very important for the semiconductors to confirm what's happening with the overall market. And you'll do much better, and again, I haven't tested this mechanically, but you'll do much better if you're buying stocks in the stock market in general when the semiconductors are headed higher. And obviously they are, as you can see here. Now, just a real quick, notice back last September, October, November, it was flipping back and forth between red and green. And when that happens, red meaning downside Landry light, green meaning upside Landry light, and 0 meaning no Landry light, when that happens over and over again, that means obviously the market is choppy. And in this case, it was sort of chopping its way lower, but you want to avoid markets when that's happening, especially when it's going back and forth like that. And again, green is good. You can see nice uptrend remains intact here. It looks a lot like the Qs, actually. You can notice we had a little Landry light pullback way back here. But so far, so good there. Now, let's take a look at Landry light and crypto, specifically Bitcoin. Notice way back here last fall, we did have Landry light for quite some time. But one thing I want to point out, again, like I said earlier, it's an illustrator, not an indicator. Even though the Landry lights continued for a while, notice that the market began to lose steam, and notice that it did reset back to 0 when it touched that moving average. So we'll always take a look at the chart itself. And then right here, you can see the market begin to sell off. We had about 9 bars of Landry light. 10's a good round number for a trend. Now, on the downside, keep in mind things can fall a lot faster than they rise. They slide faster than they glide. David Keller, if you're watching this, do not tell me that a glide goes lower. It's just a figure of speech. When a plane glides, it actually falls out of the sky, unless it's on a thermal. So anyway, you can see red is bad, but notice that after you had about 8 or 9 bars of Landry light, the market was actually rising up a little bit, beginning to rally. So that's a time where you might want to be cautious, but you don't want to get super bearish just yet. So again, always look at the chart. And then notice that we've been green for quite some time. So far, so good. Bitcoin banging out some new highs around 70-something thousand. Every time I look at the Bitcoin, I sound like old people. I'm old, but not that old. Every time I look at Bitcoin, I think, this thing's at 70-something thousand. And I know that's ludicrous, and even ludicrous would say that's ludicrous. But there were a lot of people out there, people who should really know better. And I don't want to throw anybody under the bus, but I do remember one newsletter in particular, and he poo-pooed it at 4,000 and 10,000 and 12,000. And I could probably go back to like old newsletters in my deleted pile and find where he was poo-pooing it at 1,000 or whatever. But anyway, I know for a fact that he was telling his clients how it's all fake, it's make-believe, and maybe it is. But if you're a trader, you shouldn't care about those things. You should buy things that are going up, as I'll show you in 1 minute, and sell things that are going down. If you could do that, throw in a little money management and deal with a little psychology, you'll do just fine. But anyway, Bitcoin's been in a great trend. I would look to add to your position, or if you don't have any, look to establish a position on pullbacks to the 30 EMA. In other words, a Landry Light pullback. Also, make sure, of course, the market begins to rally before you do that. By the way, real quick, last time in the last year Daily 5, I pointed out that we had a big picture news reversal, and this is some research that comes from Larry Connors. Essentially, after a news event and the market reacts, you look to actually go the other way, and that means that that news has filtered through the system and people have completely ignored it. So everybody and their brother was saying that this is the end of Bitcoin when the spot ETF was approved on this particular day here. And it did sell off initially, and they were bragging about how right they were, but look at where it is now. That was at 40-something thousand. Now we're at 72,000. So don't confuse the issue with facts. These big picture news reversals, I don't trade off of them directly, but they can be a useful tool to have in your toolbox, as I've said quite a bit, to help you build your bullish case or bearish case for downside reversals. The example I give quite often, I forget how many years ago, I think it was 2011, I was speaking in Dallas, and right about that time, and I know I said this story 1,000 times, let me just get through it. Right about that time, Mr. Jobs wasn't doing very well. I believe he had pancreatic cancer, and it looked like it was the end of the road for him. And somebody raised their hand and asked me what I thought about Apple basis that. Well, my mantra is don't confuse the issue with facts, just look at the charts. But I did have an answer for him based on the big picture news reversal. And what I said was, see how Apple reacts. And if it sells off, look to buy it when it takes out that sell-off, when it starts making new highs after that sell-off. And I don't know what it is. I don't know if it's split adjusted or whatever, but I think split adjusted Apple was like $11 a share back then. So just something little tool, like I said, to put it in your toolbox. When you look at markets that are headed straight up, as a technician, you need to ask yourself, hey, can I just buy the stuff that's going up? And the answer, with a lot of caveats, is yes, especially in crypto. But one of the caveats is the market has to be on fire, like 1999 in stocks and like right now in crypto. Now, keep in mind, the crypto cycles are absolutely crazy. So by the time you're seeing this video, maybe we're going to be in one of those little bear markets that crypto has, and that'll finish up in about 2 weeks, and we'll be back to a bull market. But anyway, I just grabbed one out of my portfolio, which I'll show you here in just 1 second. And I'm not a huge breakout trader, but in something like crypto, you can buy stuff when it's going up. When Bitcoin ideally is making all-time highs, and a lot of these pairs are banging out new highs. And you could do really well just by doing that. Of course, you have to use stops and other money management, such as the initial profit target. Now, in stocks, I calculate the volatility, and I look at the stock, and I do a few other things to figure out where I would be wrong and how far away my stop needs to be. In crypto right now, because it moves so fast, I've just been using 20% for an initial profit target. As the market matures a little bit, maybe that number might not work as well. And in general, by the way, fixed percentages don't work in markets, and that's a conversation for another time. But the bottom line there is you do have to pay attention to volatility. But anyway, right now, 20%, good round number to use for your profit target. When that occurs, I exit half of my position, and my stop is brought to break even. So ideally, the worst I could do, barring a really fast move, in stocks would be an overnight gap, obviously. But barring overnight gaps or a fast move, the worst I could do is break even, and I have a chance for a home run. And in this particular case, at its peak, not that long ago, was up over 100%. What I have been doing in crypto is peeling off a little bit at 100% too, but keeping the bulk of the remainder of the position, so half at 20%, and then a small piece at 100%, and then hang on to the rest with a loose stop to see how long I could hold on. I held on to one for 4 or 5 months recently. I was TIA, and I forget the actual name of it. And you know what they do? I have no idea. But it was a really good run, and I used the same exact technique. I exited half at the initial profit target of 20% again, got that stop to break even, and then trailed the stop loosely on the remainder. Now, Charlie Kirk years ago was kind enough to invite me to be his guest of honor for his traders retreat down in St. Lucia. And when I was speaking about the money management that I use, he said, you know, that's pretty neat, Dave. I like the way you free roll on that second loaf of the position. And I really think if you want to build some serious wealth in the market, I think that's a great way to do it. Is as soon as you get your initial profit target, you take those partial profits, you get that stop to break even, and there's a little more to the money management than that, but if you can wrap your head around that, you got it. Then you, again, trail that stop a little bit more loosely on the remainder as it moves more and more in your favor. And the idea is to get a short-term profit and then also lock in a longer-term profit. Longer-term trading has a lot of problems. Your drawdowns are going to be abysmal. That's why you don't see a lot of turtles around anymore. Those guys, they were in the right place at the right time. Not to take anything away from them, but most of them didn't do so well after those great conditions went away. Just like I'm probably not going to do fantastic once these amazing crypto conditions go away. And then stocks for that matter too. Stocks are doing really well, and when the market begins to chop around as a trend follower, I won't do as well. But anyway, right now is a time where you could buy stuff that's going great, straight up. So here's the old portfolio. I'll see what happens to this, and then I'll mention it in the next Your Daily 5 to see how it works out. And I hate to use the word hope, but hopefully we'll have a few 100% gains in some of these, and that'll be fun to show you. I know you want to party with me. Well, that's it for today. Market's looking good. Crypto's looking good. Semis, especially within stocks, are looking fantastic. Look to get long on pullbacks there. Look to just buy crypto because it's going up. If you need to reach me, Dave at DaveLandry.com. Here's the rest of my contact information. Please subscribe to my YouTube channel. That's at Dave Landry once you get to YouTube, or youtube.com/Dave Landry. Like this video and grab that plug-in while it's still free. Everybody have a great day, and may the trend be with you.